But we have a market to trade and much larger issues to discuss. Joining us is Ed Yardeni, President at Yardeni Research. Good evening to you, Ed. It's really kind of you to take time out on a Sunday evening for you, especially when the country is in holiday mood. Do you think that this US exceptionalism continues? I mean, why would people come and put money in any EM markets when you're getting 4.62 on the US 10-year and the dollar continues strong?
I think the bond market is becoming a problem for the stock market. We've had an amazing bull market here and in India and some other places as well. And I think we're going to have a little bit of indigestion, volatility, cross currents, riptides, whatever you want to call it. I think we're going to have some trouble in the next several weeks going into the new year. And I think at the top of the list certainly has to be the fact that the Fed has lowered the federal funds rate by 100 basis points since September 18th. And over that same period, the bond yield has gone up 100 basis points. So my friends, the bond vigilantes are basically disagreeing with what the monetary policymakers are doing. And that could become increasingly an issue for the stock market.
See it peaking, the bond yields at 4.6 and the dollar index at 108. Is that even on the cards, according to you?
Well, I think that these developments are not surprising to me because I did think that the economy is more resilient and was stronger than Fed officials believed back in September and October when they started to lower rates and announced that they would be beginning, it was just to be the beginning of a process of lowering interest rates. The markets now have gone from expecting 6 to 7 rate cuts over the next 12 months to thinking maybe it's only going to be 1 or 2. And I'm not convinced that we really need any more rate cuts. 100 basis points is enough.
Ed, I remember the last conversation, you said that after the banner year that US equities have had, you're forecasting a 10 to 15% correction. But before we get to that in India, just wanted a quick word on this entire H1B Visa feud, which has erupted online. How does it impact? Because Indian IT companies do depend on H1B visa. So your thoughts?
I mean, Trump backing
it makes a lot of sense to me. If highly educated, experienced workers want to come to the United States, we should be encouraging that. And so that makes a lot of sense. It would be good if we could attract some of India's great talent, but it wouldn't be good for India. So, we're definitely seeing a change here with this administration to focusing on what's in America's best interest. And I think that the president and Elon Musk certainly are right about the fact that we have a shortage of skilled workers, of highly educated workers. And if students come here to study and get good grades and graduate, I think they should be given the option of staying in the United States and working here. Increasingly, though, we live in a global world, and there's no particular reason why America's high-tech companies can't hire talent in India and that talent to stay in India. And as a matter of fact, as we know, that's in fact exactly what's happening. So I don't really have a problem with the way things are right now, but I don't have a problem with H1B either.
Ed, just the words that Trump has used. I have many H1B visas on my properties. I've been a believer in H1B, and I've used it many times. It's a great program. Now, he had made educational qualifications and the pay filter higher in his previous term, and it's widely expected by the immigrant population that he may do that further now. Allow immigration, but raise the bar of both education and salaries. Do you think with this quote, we can believe that he won't be so aggressive?
Well, I think what the quote states is pretty, makes sense from his perspective. Though I suppose that when he said that on his properties they hired a lot of people with H1Bs, he wasn't talking about rocket scientists, which is what Elon Musk is talking about. And again, I think this could actually create, in addition to all the trade tensions that are out there, now we may create tensions by threatening brain drains from countries that need to keep their brains. Again, India has some really great colleges, universities, great, talented, educated people. And I don't know that we really want to start getting into a conflict between the United States and India over attracting talent. Again, technology companies have no problems at all hiring people in India to work for them in India, and I think that's the way it should mostly continue to be.
Okay, just a quick word. So getting back to that 10 to 15% correction that you anticipate, what would be the key drivers for that? One, fewer Fed rate cuts going into this year. What else?
Well, I think what else is the market's had a huge move. We have seen that the move of late has become more concentrated. The breadth of the rally has narrowed significantly. There are too many bulls around. The sentiment is too bullish, and from a contrarian perspective, that's actually bearish. We don't want to see so many people so excited about the upside potential of the market because at some point you run out of buyers, and it doesn't take much to cause that market to go down when you have a lot of new investors jumping in at the top. And certainly if they're jumping into stocks like MicroStrategy or NVIDIA or even Tesla, they're not buying it anywhere near the bottom. They're buying it right at the top. And that makes them vulnerable to realizing that they got the top and makes them vulnerable for selling. We also have a lot of people who have huge capital gains that probably do want to diversify. They want to rebalance their portfolios away from having too much exposure in some companies. And why not take some profits? They didn't want to do that at the end of the year of 2024 because they would have to pay taxes on the capital gains. So I think a lot of them are postponing rebalancing until the beginning of the year. And so I think that may also be a factor.
Well, finally, Ed, what would you be doing with say, an extra kitty that comes to you? Would you still be putting our valuations in the US good and you would still be putting it over there? Where would India figure, if at all, in your pecking order?
Well, I think if we get a 10 to 15% correction in the US, we probably will get something like that in India as well. And India, of course, has the challenge of a stronger dollar, has the challenge of the Fed not easing and the bond yield being even more attractive here. So I would say, if you get a correction, that will be a buying opportunity. On the other hand, if you've got some positions that you've had for a long time and the stocks have done very well, I see nothing wrong with just kind of, grinning and bearing some correction here, but I wouldn't be selling long-term positions. I think we're not looking at a bear market. Bear markets usually are caused by recessions, and there's no reason to expect a recession in the United States or India, for that matter, anytime soon.
One final question then. What about Trump's inauguration on the 20th of June? Do you expect that sorry, 20th of Jan. Do you expect that to throw some curveballs? Because he is expected to sign 25 executive orders on day one itself.
Yeah, absolutely. And I think there'll be a lot of confusion about how they're going to get implemented. I think there'll be a lot of controversy about them, creating more uncertainty. And oh, by the way, while we're mentioning other factors that could create volatility, Treasury Secretary Janet Yellen mentioned that sometime around January 14th, the Treasury may run into the debt ceiling. The debt ceiling has not been in force since 2023, but just by coincidence, it's going to become enforced again on Thursday of this week. So that's another issue.
Okay, these speed bumps don't go away. But I guess they were tackled last time with a last-minute rapprochement. So let's hope that it'll happen this time as well. Ed Yardeni, it's a pleasure having with you. We've learned a lot from you all through 2024, and we hope to do that in 25. Here's wishing you a gorgeous 2025.
Thank you.